Hello everyone. I need you to stop what you are doing right now. I need you to close the door and turn up the volume. Because everything we believed about the silver market for the last decade was just proven wrong. We thought we were waiting for a squeeze in 2026. We thought we had time to prepare. We were wrong. We were catastrophically wrong. 14 hours ago, while New York was sleeping and while London was closed, the Shanghai Gold Exchange executed a trade that has effectively broken the global financial system. They didn't just buy paper contracts, they took the metal. And they paid $97 an ounce to do it. The squeeze isn't coming. It is here. At 3 a.m. Eastern Standard Time, China took physical delivery of 847 tons of silver. Let me repeat that number because your brain might verify it as an error. 847 tons. That is not a mistake. That is not a typo on a Bloomberg terminal. That is a confirmed physical withdrawal. While the price in New York was stuck at a fake $72, manipulated by the bullion banks, buyers in Shanghai were paying $97 without blinking. They paid a $25 premium over the Western spot price just to get the metal into their hands immediately. 847 tons. Gone. Let that number sink in. That number. I want you to really visualize what 847 tons looks like. Because numbers on a screen are abstract, but physical silver is heavy. A standard London good delivery bar weighs roughly 1,000 ounces. It is the size of a loaf of bread, but it weighs as much as a young child. China just bought 27,000 of those bars in a single night. Imagine a warehouse floor the size of a football field. Imagine pallets of silver stacked 6 feet high. Imagine a fleet of forklifts moving back and forth for 8 hours straight. That is what happened last night in Shanghai. That is the scale of the wealth transfer we are witnessing. 847 tons is more silver than the entire country of Mexico produces in 3 months. Think about that comparison carefully. Mexico is the heavyweight champion of silver mining. Think about the Fresnillo mine. Think about the thousands of workers going underground every day at dawn. Think about the massive rock crushers running 24 hours a day. Think about the diesel fuel burned, the explosives detonated, the chemical leaching processes. All of that effort, all of that energy. For 90 days straight, January, February, March, all of it, wiped out in a single trading session by one buyer. That is equivalent to 27 million ounces of physical metal vanishing from the market. 27 million ounces. That is roughly 12% of all the registered silver that the COMEX claims to have in its vaults. But we have to be honest with each other. We know those vault numbers are lies. We know about the leasing programs. We know that the same bar of silver is counted by JP Morgan and then counted again by the ETF SLV. So in reality, this 847 tons isn't 12%. It might be 30%. It might be 40% of the actual deliverable silver left in the Western Hemisphere. The cupboard is bare. Imagine a convoy of armored trucks. You would need 35 heavy-duty semi-trucks, fully loaded to the suspension limit, just to move 847 tons. A convoy stretching for half a mile, driving away from the Western vaults, loading onto a ship, and sailing east. That convoy represents your wealth transfer, and it is gone. To put this in perspective for the future, let's talk about the industrial consumption. Apple needs silver for every iPhone 17. Tesla needs silver for every cybercab. Samsung needs silver for every memory chip. The US military needs silver for every Tomahawk missile guidance system. And China just bought the entire available supply for the next quarter. 847 tons. It is gone. And they are not selling it back. Not for $72, not for $97. They are not selling it back at any price. Once it crosses the border into the People's Republic, it disappears into the strategic reserves. It does not come back to the COMEX. It does not come back to save the short sellers. Do you understand what this means? The window has closed. The inventory is gone. And the price has finally disconnected from reality. Let's talk about that price disconnect. Because this is the smoking gun. This is the proof we have been waiting for. For years, the experts told us that the spot price was the real price. They told us that $25 was fair value. They told us that $72 was a bubble. But last night, the market spoke the truth. In Shanghai, where you have to deliver the metal or go to prison, the price is $97. In New York, where you trade paper promises, the price is $72. That is a $25 spread. That is a 35% arbitrage. In a functioning market, arbitrage would close that gap in seconds. Traders would buy in New York and sell in Shanghai. They would back up the truck to the COMEX, take the silver and fly it to China. But they can't. Why? Because there is no metal in New York to buy. The $72 price is a phantom. It is a hologram. It is a lie on a computer screen designed to discourage you from buying. The real price, the price to actually hold the metal, is $97. And China just proved it by paying that price for 847 tons. They didn't haggle. They didn't try to negotiate a discount. They slammed the bid. They took it all. This is the end of the paper manipulation era. You cannot manipulate a market when the inventory is zero. But to understand why this happened today, and why it happened specifically on December 29th, we have to go back in time. We have to go back to the moment the trap was set. We have to understand the conspiracy before we can understand the collapse. We have to go back to November 14th, 2023. Most people don't remember this date. To most people it was just another Tuesday in the news cycle. But I remember. I remember it because the signs were there if you knew where to look. This was the day Xi Jinping visited San Francisco for the APEC summit. Do you remember that week? The media told you it was about climate change. They told you it was about easing diplomatic tensions. They showed you pictures of handshakes with Joe Biden. They showed you the clean streets of San Francisco. They told you it was a peaceful meeting. They lied. They lied to your face to keep you asleep. They gave you a puppet show while the real business was happening behind closed doors. What the history books won't tell you is that a secret directive was finalized that week inside the Chinese delegation. Intelligence circles call it Project 79, named after the atomic number of gold, but the real target was always silver. Why silver? Because silver is the strategic choke point of the 21st century economy, and the Chinese knew it. They knew. Even back in 2023, the Chinese leadership knew the American debt spiral was mathematically impossible to fix. They looked at the US Treasury charts. They saw the interest payments skyrocketing to $1 trillion a year. They knew the dollar was on a timer. But more importantly, they knew something about the physical world that Wall Street ignored. They knew the green energy transition was a trap for the West. You cannot build the future without silver. It is impossible. They knew about the solar panels. They knew that the new TOPCon solar technology uses 50% more silver than the old panels. They knew that China controls 80% of solar manufacturing. They did the math. If the West wants to go green, the West needs silver. They knew about the electric vehicles. They knew that every EV requires up to 2 ounces of silver. For the contacts, for the battery management systems, for the screens. They knew the demand was going to explode. And they knew about the supply. This is the key. They knew the West had suppressed the price so long that no new mines were opening. They looked at the geological surveys in Mexico. They looked at the data from Peru. They saw the ore grades collapsing. They knew the shortage was coming, so they decided to weaponize it. They knew that if they could corner the silver market, they could strangle the Western economy. They could shut down Tesla. They could shut down Apple. They could shut down the U.S. military-industrial complex. So the trap was set in late 2023. The plan was simple but devastating. While the Western banks were busy selling paper contracts to push the price down, China would take the other side of the trade, but not with paper. Never with paper. They took physical delivery. For 2 years, from late November 2023 until today, December 29th, 2025, they have been draining the vaults. Quietly, slowly, methodically. They didn't buy it all at once. That would have spiked the price too early. No. They were patient. They bought the dips. When the banks smashed the price down to $22 in 2024, they bought. When it rallied to $30 and then pulled back, they bought more. They utilized proxy buyers in London. They utilized shell companies in Singapore. They routed orders through Dubai. They masked their footprints, but the metal kept moving, ounce by ounce, bar by bar, ton by ton. It flowed from west to east. They knew the weakness of the COMEX. They knew that the COMEX operates on a fractional reserve system. They knew that for every ounce of real silver in the vault, there were 500 paper claims against it. It is the biggest Ponzi scheme in history. And China decided to call the bluff. They knew that if they just kept pulling the physical metal out, eventually the music would stop. Eventually the vault doors would open and there would be nothing inside but dust. Think about the arrogance of the Western banks during this time. Think about the traders at J.P. Morgan. Think about the risk managers at Citi. They saw the inventory dropping. They saw the registered silver levels falling to historic lows. But they didn't stop shorting. They doubled down on their arrogance. They thought they were the masters of the universe. They thought they could print paper contracts forever to suppress the price. But China was counting the ounces. They have satellites tracking the mining shipments. They have insiders at the Swiss refineries. They knew exactly how much was left. They knew the West was running on fumes. And that brings us to this week. Why now? Why drop the hammer on December 29th? Why buy 847 tons in a single night? It wasn't random, it was calculated. This is the week of maximum weakness. Traders are on vacation. Liquidity is dry. They waited until the Western financial system was asleep at the wheel. They waited until the inventory levels hit the critical red line. And then they struck. They didn't just buy a little. They cleared the shelf. 847 tons. This was not a trade. This was an ambush. They knew that by taking this amount out of the system right now, they would force a default. They knew the banks would wake up this morning short millions of ounces that they cannot buy, because nobody is selling at $72 anymore. The trap has snapped shut. The prey is caught. And the prey is the Western financial system. Now let's do the math. Because emotions can be manipulated. News headlines can be manipulated by the elites to keep you calm. But the numbers don't lie. Mathematics does not negotiate with central bankers. And when you look at the arithmetic of the silver market right now, it screams that the system is dead. The equation just broke. Let's break it down simply so there is no confusion. I want you to understand exactly why 847 tons is the straw that broke the camel's back. I want you to be able to explain this to your family when they ask why the world is changing. First, look at the global production side. In 2025, the world mining output struggled to reach 820 million ounces. That includes everyone. That includes the mega mines in Mexico like Fresnillo. That includes the production in Peru, China, Russia, Australia, Poland, 820 million ounces. That is the supply cap. It is a hard ceiling. You cannot just print more silver like you print dollars. It takes 10 years to find a deposit, get the environmental permits, build the infrastructure, and start mining. So that number is fixed. It is not going up anytime soon. Now look at the demand side. This is where the nightmare begins for the banks. In 2025, industrial demand exploded beyond anyone's predictions. The solar panel industry alone consumed 600 million ounces. Why? Because the new solar technology, the TOPCon and HJT cells, require much more silver paste than the old panels. The green revolution is eating the supply alive. The electric vehicle sector took another 300 million ounces. It is not just the cars. It is the charging stations. It is the grid upgrades. Every contact, every switch, every sensor, it all needs silver. Silver is the veins of the digital world. And then there is the new beast that nobody calculated correctly. Artificial intelligence, the AI data centers, the NVIDIA chips, the quantum computing processors. They swallowed another 200 million ounces. Silver is the best conductor of electricity and heat on the periodic table. AI needs speed. AI needs silver. Do the math with me. Supply is 820 million. Industrial demand alone is 1.4 billion. That is a structural deficit of nearly 600 million ounces. 600 million ounces missing from the equation every single year. And that doesn't even count investment demand. That doesn't count jewelry. That doesn't count silverware. And it certainly doesn't count the 847 tons that China just vacuumed out of the market last night. We have been running a deficit for 5 years straight. We have been eating into the above-ground stockpiles. And the experts told us it was fine. They told us there was plenty of silver in London. They told us the COMEX vaults were full. They lied. The math proves they lied. If the vaults were full, answer me this simple question. Why is there a $25 spread between New York and Shanghai? Think about the implications of this. Right now, as I speak to you, you can buy a paper contract on the COMEX for $72. That is the price on CNBC. But if you want to buy actual physical metal in Shanghai, you have to pay $97. Do you understand what this arbitrage means? It means the COMEX price is fake. It means the $72 price is for something that doesn't exist. It is a phantom. It is a digital ghost. If you had a bar of silver in London, why would you sell it for $72 when you can ship it to China and sell it for $97? You wouldn't. Nobody would. A rational actor sells to the highest bidder. That is why the Western vaults are empty. The metal flows to the money, and the money is in the East paying $97. The West is left with paper contracts and empty promises. Let's look at that number again. 847 tons. That is 27 million ounces. To put that in perspective relative to the deficit, that is 10% of the entire annual deficit gone in one night. But it gets worse. The COMEX claims to have registered silver available for delivery. They claim to have 40 million ounces. But we know about the rehypothecation. We know that for every ounce in the vault, there are 500 paper claims against it. Let's do the math on that leverage. If there are 500 claims for every ounce and China just removed 27 million ounces, how many paper contracts just became worthless? Do the multiplication. It is in the billions. Let me repeat that calculation so you understand the gravity of the situation. 27 million ounces of physical metal supports billions of ounces of paper derivatives. When you remove the base of the pyramid, the whole thing collapses. 847 tons was the base of the pyramid. The banks were using that metal to lease and release and swap to keep the price down at $72. Now that metal is gone. It is in a vault in Shanghai. It is off the market. The collateral for the entire Western derivatives market just evaporated. This is why the price is about to go vertical, because the math forces it to. You cannot cover a short position with metal that you don't have. And you cannot buy the metal back for $72 when the new owner paid $97. The deficit is real. The inventory is gone. And the leverage is exploding. This is a mathematical certainty. We are not guessing anymore. We are watching the equation resolve itself in real time. Supply minus demand equals negative inventory. Negative inventory equals price explosion. It is that simple. The banks tried to fight gravity with paper. But 847 tons of reality just hit them in the face. $97 is just the floor. Once the panic starts, the math suggests a price north of $200, and that is conservative. Now we get to the victims. Because in every financial reset, there are winners and there are losers. There are predators and there are prey. And for the first time in history, the biggest technology companies in the world are the prey. I'm talking about Tesla. I'm talking about Apple. I'm talking about Samsung. I'm talking about Raytheon. These companies are the titans of the modern world. But they have a fatal weakness. They are addicted to silver. And they are trapped. They are trapped because they believed the lie of just-in-time delivery. They believed they could always pick up the phone and order 1 million ounces at the spot price. They didn't stockpile. They didn't prepare. Look at Tesla. Elon Musk is trying to ramp up production of the Cybercab and the Optimus robot. Both of these rely heavily on silver, for contacts, for sensors, for batteries. Without silver, a Tesla is just a statue. It doesn't move. It doesn't charge. It doesn't think. Now imagine being the purchasing manager at Tesla this morning. You are sitting in your office in Austin. You see China buy 847 tons. You see the price in Shanghai hit $97. But your contract says you pay the London price of $72. You pick up the phone. You call your supplier. And what do they tell you? They tell you force majeure. They tell you we have no metal. They tell you, if you want silver, you have to bid against China at $100. This is the trap. The industrial users are short physical silver. They don't have stockpiles. They have contracts. But contracts are just paper. You cannot melt a contract and put it into an iPhone 17. Apple is sitting on billions of dollars of cash. But cash is useless if there is no metal to buy. The wealth transfer that is happening right now is not just from the banks to the people. It is from the tech companies to the commodity holders. China knows this. China is the predator here. They didn't buy 847 tons just to make a profit. They bought it to choke the Western supply chain. They bought it to gain leverage over Apple and Tesla. You want silver for your chips? Build your factories in China. Share your technology with us. Or pay $150 an ounce. That is the negotiation now. And then there are the banks. JP Morgan, Bank of America, Citi. These are the entities that set the trap but caught themselves in it. They are the ones who sold the paper shorts. They are the ones who promised to deliver silver at $72. They are the ultimate prey because they owe metal they don't have, and they owe it to people who are demanding delivery. When China took that 847 tons, they triggered a run on the bank. Now everyone wants their metal. The hedge funds want their metal. The family offices want their metal. And the banks are staring at an empty vault. This is a classic short squeeze. But on a global scale, the predator became the prey. The banks thought they were the masters of the universe. They thought they could manipulate the price forever. But they forgot the golden rule. He who has the gold, or in this case, he who has the silver, makes the rules. And right now, China has the silver, 847 tons of it, plus everything else they accumulated since 2023. They have cornered the market, and the Western banks are trapped in a cage of their own making. We are seeing panic in the boardrooms right now. Leaked memos from Silicon Valley are already circulating. Secure supply at any cost. Ignore the spot price. Pay whatever it takes. This is exactly what we predicted. The separation of the paper price and the physical price. Tesla is willing to pay $100. Apple is willing to pay $120. Because the alternative is shutting down the factory. The alternative is bankruptcy. So the price of $97 in Hong Kong isn't a bubble. It is the new reality. It is the price of survival for the tech industry. The trap has snapped shut. And the victims are the ones who hold paper. The victims are the ones who hold dollars. The winners are the ones who hold the metal. 847 tons was the signal. The hunt is over. The feast has begun. But there is one more victim, and it is the biggest of all. It is the victim that affects you, your family, and your savings. The United States dollar. You have to understand that this isn't just about a shiny metal. It is about currency. It is about the definition of money itself. When silver trades at $97 in Shanghai and $72 in New York, the market is screaming a warning. It is screaming that the dollar is broken. It is screaming that the dollar is no longer a store of value. It is no longer trusted as the global pricing mechanism. The banks, specifically banks like JP Morgan and HSBC, are not just short silver. They are short reality. They bet against the price rising. They are short hundreds of millions of ounces. Imagine being short silver at $72 when the real price is $97. The losses are in the billions, tens of billions, overnight. If they mark their books to market, they are insolvent, they are bankrupt. They are not just betting on a metal, they are betting against the collapse of the Fiat system. And reality just walked in the door. Reality walked in with a purchase order for 847 tons. This is a margin call for the entire Western banking system. If they have to cover their shorts at $97, the system implodes. This is why I told you to stop what you are doing. This isn't a trade. It is a lifeboat. The Chinese know the dollar is collapsing. They have known it for years. That is why they exchanged paper currency for 847 tons of hard assets. They are exiting the burning building. They are dumping paper to buy metal. And they are doing it now, before the rest of the world wakes up. Think about the feedback loop that starts tomorrow morning. As silver rises to $100, then $150, the dollar looks weaker. As the dollar looks weaker, more countries will dump their treasury bonds to buy silver and gold. It is a death spiral for the currency. The 847 tons that left the vault last night is just the beginning. It is the first domino. It signals to the world that the US dollar is no longer the pricing mechanism for commodities. If you want Saudi oil, soon you will need gold. If you want Chinese electronics, you will need silver. The paper game is over. The trap was set to break the dollar's hegemony. And it worked. So how do we navigate this? How do you survive what is coming in the next 48 hours? The decisions you make right now will define your financial future for the next decade. Here is your roadmap. I have broken it down into 5 critical steps. Step 1. Expect force majeure. The COMEX will likely stop physical delivery within days. They will declare an emergency. They will say it is due to logistical challenges or irregular trading activity. It is a lie. It is a default. They will try to settle your contracts in cash. They will offer you 72 worthless dollars instead of the metal that is worth $97. Do not accept it if you can fight it. Demand the metal. But know that the doors are closing. If you hold paper silver, get it out now. Step 2. Watch the premiums. This is the real price indicator. Ignore the spot price you see on the television. That is a fictional number generated by a computer. If the screen says $72, but your online dealer asks for a $40 premium, the real price is $112. The real price is what you pay to get it in your hand. Do not be fooled by a low spot price. If spot goes down but premiums go up, it means the shortage is getting worse. It means the physical market has decoupled from the paper market. Step 3. Ignore the media gaslighting. They will call it a glitch. They will call it temporary volatility. They will blame it on Russian hackers or a computer error. Do not believe them. They are lying to prevent a bank run. If they smash the paper price tomorrow, if they drop it to $60 to scare you, buy. Buy everything you can find. Buy junk silver. Buy rounds. Buy bars. Buy silverware if you have to. Because once that 847 tons is digested by the market, the next price leg up is to $150. The elasticity is gone. The supply is gone. This is your last chance to buy at double digits. Step 4. Watch the gold-silver ratio. It is currently sitting at roughly 70 to 1. That is historically absurd. If silver stays at $97, gold has to move to $7,000 to maintain the ratio. Or silver moves to $200 to catch up. Mathematics favors silver. Silver is the metal that is consumed. Gold is hoarded, but silver is burned up in solar panels and missiles. The ratio will collapse. We could see 30 to 1, or even 15 to 1. Prepare for the re-rating. Step 5. The exit strategy. This is the most important part. Listen to me. Do not sell for dollars. I repeat, do not trade your generational wealth for dying paper currency. The dollar is the victim here. Why would you trade the winner for the loser? Why would you trade the asset that China wants for the asset that China is dumping? If you need cash, borrow against your silver. Use it as collateral. Trade it directly for land. Trade it for productive assets. Trade it for a farm. But if you sell for fiat currency, you are jumping back into the fire. You are trading real money for monopoly money. Hold the line. We are witnessing the end of an era. The era of price suppression is over. The era of $72 silver is over. The era of trusting the Western central banks is finally over. The curtain has fallen. You survived the long bear market. You survived the dark years. You survived the ridicule from your family and friends. You kept stacking when they told you it was a dead asset. You kept buying when they told you it was a pet rock. You watched the price go to $18 and you didn't sell. You held on. You had faith in the fundamentals when everyone else had faith in the Fed. Now, you are sitting at the table with the central banks. You are sitting at the table with the giants. You are sitting at the table with history. You own exactly what China wants. You own exactly what Tesla needs. You own exactly what the system needs to survive. You hold the power. In 5 years, when the dollar has lost its status and silver is trading at a price we can't even imagine today, you will remember this week. You will remember where you were. You will remember the exact moment you heard that China bought 847 tons. You will remember seeing the price disconnect from reality, and you will look at your stack, and you will know that you made the right choice. Hold your silver like your life depends on it, because your financial sovereignty depends on it. Do not let them shake you out. Do not let them scare you out. The trap has snapped, the banks are caught, and you are finally free. Subscribe to this channel right now to stay ahead of the collapse. Like this video to help us beat the algorithm suppression. We will update you as the situation develops. Thank you for watching this critical information. Share this video with everyone you know while you still can. The window is closing. Good luck.